After the 34% horror story decline, the market has reclined a steady 20% in just 3 trading weeks. One too many people now seem to be in the midst of a rampant buying spree. But are they really ready to fly to the sun, or will proud wings of wax melt and plunge them to a certain market death? Hello everybody, here's a quick market update and what we're looking at the moment. I did not intend for this one, but I decided to put it together with the intention to save some people from their own wishful thinking and to hopefully reach out to some unversed market participants with a serious warning. To anyone who has gotten a bit carried away with the rally as of lately, I strongly advise you to watch all of this episode, particularly the last part, which gives a detailed perspective that should make things clear to you with regards to what we are likely facing. But before we get started, do note that nothing in this episode is financial advice. Everything I say is my own opinions only. Prices are rising quickly, albeit in a volatile fashion. All over social media and stocks forums alike, I see two camps. One is the skeptics who quietly whisper crap and who are either ignored or rapidly shot down and accused of being doomsayers. The other camp is the slightly louder one that enthusiastically clamors, "Here we go. We'll get new all-time highs within the end of this year," and "Our stock's fundamentals are so strong, logically nothing can really stop us," or anything equivalent to this level of optimism. But rest assured, steep V-shaped formations like this, especially after an all-time high, typically end in tears. But what exactly is it that is stronger? And why are so many retail investors convinced that the worst is over? If you haven't watched the latest 2 market episodes on the corona, I strongly recommend that you do, for in those episodes we discuss precisely these things in detail. And this episode is to a good portion a mere extension of them. Until the bigger picture drastically changes for the better, expect idealists to transfer their wealth to the realists. It may be the ultimate death blow and reality check for wishful thinkers and postmodernists. Now to some quick technicals. First of all of my detailed technicals from the previous Corona market episodes stand. Nothing has changed. Quite the opposite rather. I thoroughly said that I expect us to hit the 0.5 and 618 Fibonacci's at one point or another, which also happened to coincide with a plethora of resistances. At the moment we are trading right at the 382 fib, and despite nothing being bullish at all, we still have another theoretical upswing to look forward to, upon which I just cannot see how we would break through for any significant time without some proper magical corona vaccine rocket fuel. On a quick note, if this episode helps you better understand what we are going through, and if this channel is a compass to you in this dark market storm, please like and subscribe so that you too can stay on a steady course. It helps the channel too and makes sure that more people can benefit from this very same information. And if you happen to know someone who may gain from watching this, please do share it with them. Now, first and foremost, the bearish continuation pattern of which I spoke about in the Corona market episodes, as in the pattern that constantly kept changing its mind, it still hasn't decided what it wants. This can still play out in a haphazard fashion with weird sideways movements, but for the time being, it does show clear signs of being a rising wedge in the making with 3 confirmed touches at the top. Technically though, it can still play out as a classical bear flag. Whether we are looking at a rising wedge or a bear flag or anything else for that matter, a break to the downside is what should be technically expected. However, given how unpredictable the market is right now, with its fast turns, an outbreak may just as well turn into a false one. And given also that we're trading literally in the middle of the 0.5 and 618 fib levels of cluster resistance and the strong support at the 1240 area, taking a trade now, even with an outbreak, would offer little or no expected value, but rather a lot of unnecessary volatility. Compare this to flipping a coin for too much money. You might still win, but it will simply come down to dumb luck and there will be no long-term benefits in it for you. That stuff is for degenerate gamblers. Disciplined and calculating traders, on the other hand, stack the odds in their favor. For these reasons, my game plan is still to take an initial smaller short position with low leverage at the 0.5 Fibonacci, and then ladder in bigger positions with higher leverage at the 618, and possibly even up to the 786. Unless, of course, any significant bullish news on the coronavirus surfaces, which will go without saying from now on. The same goes if we were to get an outbreak downwards. Given that such event were not to be too delayed, I will take a leveraged long position at the 1240 area. However, and this is important, so please listen carefully, the longer it takes before any possible retest of that 1240 area, the weaker the fundamentals will be, as global productions will still be at a halt and unfathomable amounts are bleeding the economy every single day through death by 1,000 cuts. That is, the longer it takes before we potentially retest the 1240 area, the weaker it will get. Unless we retest it within roughly 1 month, I will no longer use this area for long swing trades. And even if we were to bounce from the support, the further into the future such bounce takes place, the less upside I expect from each and every bounce. Moving on to the RSI, on the daily chart it has recovered a bit too much to look healthy. On the contrary, this is textbook RSI behavior in continuation patterns. And even more beautiful it would be if we were to get a clean touch on the upper bearish blue RSI line whilst at the same time testing the 0.5 or 618 fibs. This would very much be a likely scenario and one that would increase the chances of an explosive move to the downside, as we would still be trading in the bearish blue RSI channel, both on the daily as well as on the weekly. To sum up the technicals, one would be wise in keeping one's head cool and not get carried away just yet. For so far, everything we see is a textbook trap aimed at killing dreams and transferring wealth from idealistic dreamers to realists. For more on idealistic versus realistic traders, please watch the February episode dedicated to this very topic. And to further stress the situation, everything as said in the previous 2 Corona market episodes stands, both the technicals and the bird's eye perspective. To further clarify the picture to people who may look at this steep rally from a dangerously incorrect angle, here's the deal. As stated many times over by now, until we know what will happen with the coronavirus, the index will continue to lead individual stocks. From a practical point of view, this comes down to uncertainty and fear within the herd, as bigger things control the future fate of any given company as opposed to the individual companies themselves, which is the case under normal circumstances. If you want proof of this, then take a look at pretty much any stock chart and you will see that they have behaved very similarly since the peak in mid-February. The only exceptions might be low liquidity stocks where a single 3-digit trade can swing the stock price several % or more in either direction. In this sense, individual company fundamentals are still irrelevant until we know for certain whether we will bounce back up, have a recession or a depression. Just look at how the American stocks indices went down by as much as 89% after the 1929 crash. I'm sure the majority of the big companies still had solid fundamentals all the way down to the bottom. Hence, assessing such situation as the one we are faced with at the moment on a company level rather than on a macro level can quickly prove disastrous. The same applied to the Manhattan housing and land market, which too crashed by 88%. In this sense, the fundamentals were irrelevant because there were too few people with spending power to buy properties or land or any company's goods and services. The same will apply if we were to eventually enter an economical depression, which most renowned economists unanimously claim most likely will happen and have busied themselves in warning us about for the last 10 to 15 years. The weakened impact of individual company fundamentals at the expense of a communal collapse is what laymen don't grasp. First of all, few if any have any personal points of references of an economical depression or hyperinflation. For knowing something intellectually as opposed to emotionally are two polar opposite ways of learning. We primarily learn our lessons when they hurt, which is why I often say that physical pain or the threat thereof and losing money are the only true teachers around. You'd be surprised at how quick you can learn anything under any of these two circumstances. This current market trend of naivete stemmed from a herd who has never been subject to any real dangers, fails to understand the possible severe consequences that lie ahead. It's different this time, they say, as if our present generations are automatically smarter and better able than the previous and subtly implied stupid ones. The "it's different this time" statement is nothing short of hubris and arrogance, and as we all know, pride goes before destruction and a haughty spirit before a fall. Once the due crisis has scarred many enough people for life, you can bet the farm the world will regain some humility. For 3 generations to come, will we no longer listen to opinionated attention whores whose statements are based on emotions rather than on hardcore facts. Things may still go parabolic and initiate that Elliott 5 wave that is theoretically still in play. However, it would be naive to expect it to happen unless we get some very bullish news with regards to the coronavirus. And even if we do, an economical depression should still be looked out for none of the macro fundamentals have changed. It would simply be delayed after falsely lulling the market into a false sense of security. Expect such a crash to be even worse than if it were to happen right now. On a final note, I don't wish to piss on anyone's parade. All I want to do is to convey a friendly warning of possible dangers due to the soaring prices as of late. Make of it whatever you want. And please feel free to look into any of the other videos on my channel. That was all for now. Thank you and goodbye.